Yeah. All right, we're up and running. Welcome. Mr. Director, we're about 9:02. I've got technology humming. Please proceed.
Thank you, Mr. Chairman. I'll start with a roll call for quorum. Commissioner Meyer? Here. Commissioner Racines?
Here.
Commissioner Pope?
Here.
Commissioner Revel? Commissioner Wallace?
Here.
Commissioner Naves?
Excused. We'll see if she tunes in at some point.
I believe she will be. And Chairman Gordon?
I am here.
Mr. Chairman, you have a quorum.
Very good. Please proceed.
Thank you, Mr. Chairman. I will first read our disclaimer. Key decisions pertaining to the Wyoming Stable Token Initiative will be made by the commissioners of the Stable Token Commission the state legislature, in public meetings such as this. Further, the only commissioners are those appointed by statute, the governor, or a majority vote of the commission. At this time, the Frontier Stable Token, or FRNT token, issued by the commission, the first Wyoming Stable Token, is now available for purchase by the public on Kraken, a Wyoming domiciled cryptocurrency exchange. A link to the listing page for Front is on our website's homepage. The Front token has been deployed on mainnet Arbitrum, Avalanche, Base, Ethereum, Hedera, Optimism, Polygon, and Solana blockchains, and smart contract addresses are published on the Commission's website. Any centralized exchange claiming to sell or distribute Front or Wyoming stable tokens besides Kraken should be considered fraudulent. Caution is advised for users looking to source Front from decentralized exchanges. Please do not attempt to purchase tokens from unauthorized sources. Information outside these public meetings should only be considered factual and legitimate if it is distributed through our official channels. At this time, these are limited to our website at stabletoken.wyo.gov, the Wyoming Legislature website at wyoleg.gov, and our social media channels with the @WyoStable username on Twitter, YouTube, GitHub, and Warpcast. I'll also note that agendas are outside as well as a sign-in sheet, so if you are here in person, please do fill those out. We appreciate it. And with that, Mr. Chairman, I would like to proceed to today's agenda for review.
Very good. Are there any comments or questions? Please proceed.
Thank you, Mr. Chairman. So for today, we'll have our standard updates and approvals, including the meeting minutes from our prior meeting in March. We'll go through the monthly budget review for the month ending March 31st of 2026. I'll provide a stable token industry update. We'll talk through some of the status of the issuance of Front and how that is performing. We'll briefly review the interim topics ahead of the Select Committee on blockchain. And then we'll go into rulemaking updates. So precipitated by the statutory amendments to the Stable Token Act, we have some changes to our reserves management and token management rules that we'd like to get approved by the Commission so we can begin the promulgation process. We'll kick off our Q2 2026 quarterly blockchain selection exercise with one criteria update. We will then look to have approved the BFY 27 AWEC JCQs or job content questionnaires to keep the team on board. Flipping over, we'll go through some next steps, upcoming meeting events, and then, Mr. Chairman, I would suggest we open for public comment before an executive session. Typically, that's how we've been doing it, so we can have everybody in the room who would like to provide feedback and do so. Then we would break into an executive session for a review of the blockchain data analytics and intelligence policy under Wyoming Statute 16-4-405, subsection A, Romanet 12. And then a deliberation of the appointment of the executive director for the next biennium. That would be under Wyoming Statute 16-4-405, subsection A, Romanet 10. And with that, Mr. Chairman, unless there are any questions, I would proceed to the meeting minutes.
Are there any questions or changes to the agenda? Hearing none, we'll proceed to the minutes. I think you have all had a chance to review those minutes. Are there changes, corrections, or color that are necessary? If not, I'd entertain a motion to accept.
Mr. Chairman?
Yes.
I would move the approval of the minutes.
Thank you, Treasurer Meyer. Is there a second?
Second.
It's been seconded by Commissioner Revelle. All in favor, signify by saying aye.
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 We have Flavia.
Mr.
I'm
Chairman,
here, Governor.
Buzz is online.
Very good. That motion carries. We'll proceed.
Thank you, Mr. Chairman. So the next item on the agenda, as usual, is the expenses, the budget review for the month ending March 31st of 2026. It took me about 21 months, but we finally got this on front and back, so it's a bit more legible. So you can see the line items on both sides. Flipping over to the back, you can see our expenses for March. The salaries and benefits, which predominantly drive the expenses for this month or every month, have been stable, including the increase to Social Security that kicked off in January. That has not increased since. We just be keeping an eye on that. So that seems to be working as intended or being reported as intended. In terms of travel, we did complete our moratorium following the completion of the budget session. So there was some in-state travel for myself. I did attend the Wyoming Bankers Association Stablecoin Summit on March 19th up in Casper. So myself, members of the Bank of North Dakota, and the ICBA, which is the Community Bank Association, all had a chance to present there. There's a bump in out-of-state travel. That is for myself, our CFO, Joseph Saldana, and our Chief Information Security Officer, Keith Lawhorn, traveling into Washington, D.C. for the DC Blockchain Summit, meetings with Senator Lummis, and meetings with representatives from other states interested in potentially leveraging our technology and legislation for issuance of a stable token that we might put out on their behalf. And I would also note that the tickets for that event for Mr. Lawhorn, Mr. Saldana, are captioned at 200 series. That's the $198 line item. Moving down to hardware, software, and intangibles, we do have a fairly large bump for the month of March in that line item. That is predominantly driven by 2 annual licenses for Salesforce. So Steph, our senior business project management analyst, and myself both got on Salesforce. One of the things we had identified as we scale the program is we were manually managing a contact list, about 2,300 people. So this is something that will help us automate outreach responses and as well as prioritize where we want to spend our time by sizing the different deal flow that we could have in there for entities interested in the stable token. Telecom charges are standard, just over $200. And then for the professional services, we had monthly fees for Paul Hastings as our external legal resource, for Inca Digital, which is our open source intelligence provider, and the network firm LLP, which is our audit and attestation partner. Those are all fairly standard monthly charges, so no real deltas there. And with that all said, what that means is the commission expenses to date are $3,335,543 out of an appropriated budget of $5.8 million. Therefore, we just spent 57.5% of the total budget for the biennium. And I'll also note that some portion of that in October in the miscellaneous items was for purchase of a stable token for ourselves. So that is not as much as an expense as it is an asset, but because this reflects the state's budgeting process through the Wolves platform, it is counted expense and we treat it as such for the purposes of this form. That would leave us with $2,464,456 for the remainder of BFY 27, or 42.5% of the total budget for the remaining 3 months of the biennium. So we've again come to close to the finish line here with a fairly conservative fiscal outlay, which has always been the intent. And I'll just quickly note on the detail sheet, this one we have not gotten to print out on 2 different sheets. Not sure if it would help anyway, but nothing really to add here other than some additional granularity about Salesforce and the computer software maintenance and subscription line item, that driving $3,168 of expense just by itself, but that is again for the full year for 2 licenses. Any questions on the expenses for the month of March?
Are there any questions? Director Paula, I think you made the comment that we bought some stable token for ourselves. I think the implication's pretty clear, but you might want to just make sure,
Sure.
You say what that is.
Absolutely. So, Mr. Chairman, this is something we've covered in the last couple of meetings because it has gone on the line item since October, but we always do like to address it so we don't have a very big delta on there that surprises anybody. The goal here is for the commission to move some portion of its funding into the stable token, predominantly for testing. Before we launched this to the public, we wanted to make sure that the issuance and redemption process was working as intended. It has. That the bridging across different blockchains is working as intended. It has. And the goal is to revert those stable tokens back to the agency in time.
Thank you. Commissioner Pope.
Thank you, Mr. Chairman. Okay, so on that, and I'm looking at your notes, that will revert back to the budget at some point, but it is listed right now as an expense, but shouldn't that be a balance sheet item?
So through the chair, Commissioner Pope, I think this is something we've touched on in prior meetings. This is the expense report. This is the budget that we get from Wolves. What we are working on, we presented previously as a draft copy, was the full suite of GASB financials. So that is what our Chief Financial Officer, Joseph Saldana, is working on. We'll have another cut of that following this discussion and the attestation report, which I'll touch on in a second. So you've jumped to one line item there. There we go. So the goal for us is to have well, this is very helpful and this ties us back to the state for the BFY 25 biennium. Once we hit that 6/30 date, the expectation is we, as a component unit, will be responsible for our own audited financials. We are engaging the network firm as well for that process. They've been with us. We're already doing some of the PCB work on that. Sorry, PPC work on that. And the goal is to have those audited financials ready as early as July, ahead of the October submission date. Getting a little bit ahead of myself on that. Main thing I want to highlight here in terms of the totality of the reporting is Joe has been running monthly reconciliations in the background that not only include the expenses that we are seeing through the state, which is what you're looking at right now, but also multiple other sources that are not captured in the state's financial reporting system, including on-chain transactions. So any stable tokens that move, the gas fees associated with powering those transactions with native cryptocurrency on a given blockchain, and then the reserves that are held at Franklin Templeton are also technically a balance sheet item for us, because while the trust account is held for the benefit of the token holders, we are generating several tens of thousands of dollars of interest on that already. So that is a state asset, and we want to reflect that, but that would not be captured in the Wolves system.
Mr. Chairman, just
Go ahead.
thank you. Now, I just want the record to note that this is not an actual use of funds. This is just a transfer of funds and that on a balance sheet, as opposed to an expense that we're looking at. And at some point in time, that interest component that you're talking about will be reflected as actual income to the Stable Token Commission.
Thank you. That clarified the point that I was, so thank you very much. Excellent.
Thank you, Mr. Chairman. Thank you, Commissioner Pope. So we've covered off on the GASB presentation, but just to revert back one item on the agenda here, the March Reserves Attestation Report that has been drafted and completed. That is simply for CFO Saldana and myself to sign off on this morning. We did make some changes to that report, and we will send that out once it's live and on our website. But those changes were made to reflect, again, the statutory revisions made through the amendments to the Stable Token Act. So now that we have a different flow of funds, where, in short, when the interest income is derived on our reserves and comes back to the state, rather than being over collateralized, that is intended to first pay down the obligations of the agency and then over collateralize subsequent to that. That is a change and a reversion from how we were operating under the last cut of the Stable Token Act. So that's something that we had to make some changes on. But with that attestation report, I'd also note that our team continues to drive forward on the daily attestation as we drive towards real-time attestation. So if you recall, during our meeting last month, we did a demonstration of that daily attestation system where we could see in functionally real time how many stable tokens we have outstanding and the reserves that back them. Again, we've had to make some changes to the software and the code underlying that because we have the statutory updates. So we've reworked some of that. And our team is currently performing UAT, or user acceptance testing, to make sure that we're all comfortable, we understand the controls in place, and we all understand the mechanisms by which we can use and report through that platform before pushing it live on our website. But the goal here is by roughly the end of this month, we will have a widget on the website that would allow anyone who visits stabletoken.wyo.gov to see, at least on a daily basis to start, the amount of reserves that we have and the interest that we're generating on those reserves. I'll see if there are any questions on that.
Yeah, Commissioner Meyer.
So the attestation, that's is that actually based on what I guess our financial officers internal audit, or because people can attest to things, but I want to make sure that everybody understands that there's hard numbers behind it.
So through the chair, Commissioner Meyer, excellent question. As we are a small team, everyone functionally tags into that process, myself and the rest of the C-suite. So while the reports are initially prepared by CFO Saldana, I will note that the token balances are reviewed by our Chief Information Security Officer, Keith Lawhorn. I will note that the portfolio is also reviewed by our Chief Risk and Compliance Officer, Deborah Brooks, who makes sure that the tenor of all of the U.S. Treasuries and the repos that we're purchasing fall under our statutory framework of Treasuries with 365 days or less to maturity, repos 30 days or less to maturity. So that has a second pair of eyes on that as well. I look at everything, and then CFO Saldana and I both sign off on the attestation report. Plus, we have the independent opinion from the network firm regarding the presentation of the numbers. So there's a lot of eyes on this, pretty much the totality of the team and an external independent audit partner. Okay.
Good. Any other questions, comments? Please proceed.
Thank you, Mr. Chairman. Next item on our agenda is the stable token industry update. So despite the volatility of the digital asset industry over the last several months, the stablecoin market cap seems to hold steady. We are back up over $300 billion at 303, and that is up 35% from a $225 billion market cap last year. Stablecoin transfer volume has been $10.5 trillion over the last 30 days. So I believe I said this in my presentation last month, but worth repeating. We've pointed to the amount of stablecoin transaction volume now surpassing Visa and MasterCard in aggregate. But as of February, it's actually surpassed automated clearinghouse volumes for a 30-day window as well. From a domestic perspective, some updates on following the passage of the Genius Act, the rulemaking that is being done by federal agencies. The Treasury put out a NPRM, a Notice for Public Rulemaking, at the beginning of the month. That is to get feedback on their framework requiring state regulators of stablecoins issued under the Genius Act to have a substantially similar framework at the state level to the federal level. So I am not sure if the 60-day clock started on that yet because it was released publicly, but I'm not entirely sure it's on the Federal Register yet. We're keeping an eye on that one, and we've certainly been having some discussions with the Division of Banking on that to make sure they're aware of everything going on in that realm. Additionally, within the Treasury, there is a proposed joint rule from FinCEN and OFAC on April 8th that would subject permitted payment stablecoin issuers. They would essentially be considered as financial institutions and everything that would come downstream of that regarding the Bank Secrecy Act and reporting into FinCEN. And then on the 10th, the FDIC also put out their solicitation for public comment that would impact the potential insurance mechanisms underlying stablecoins issued under that Genius framework, again, permitted payment stablecoin issuers. And also would clarify the treatment of tokenized deposits. There's still a lot of dialogue about stablecoins versus a tokenized deposit that lives inside a bank and may have some fractional lending component to it. On the market structure bill, the Clarity Act, that is still hitting a bit of a bottleneck as there is tension between the digital asset lobby and the banking lobby as to whether third parties can provide interest or yield or other rewards for clients on their platforms that hold stablecoin balances within the confines of that given platform. We've seen rumblings that there's been a compromise and additional legislation is going to be added, but until things hit the public waves, we're not totally sure of any of that. And then one more item I wanted to mention for the domestic side, the White House Council of Economic Advisors did issue a report several days ago on the effects of stablecoin yield prohibition on bank lending. So as the punchline, what they found and purported is that eliminating stablecoin yield would increase bank lending by only 0.02%, and therefore a yield prohibition would do very little to protect bank lending while foregoing the consumer benefits of competitive returns on stablecoin holdings. That being said, the American Bankers Association pushed back on those findings, noting that the baseline used in that assessment by the White House used the current market cap of stablecoins at $300 billion, whereas if you use projections of $1 to $2 trillion, or what Citigroup is saying with $3.7 to $4 trillion, the numbers don't really hold up. So the truth is likely somewhere in the middle, but I wanted to make sure we made that a balanced mathematical perspective. Any questions on the domestic update before we head international?
Commissioner Meyer.
I guess from my perspective that we don't need a yield bearing stable token for our business analysis and our use cases. And so there might be additional use cases with the yield one there, but we've got a lot of runway in a lot of areas to fly with ours without having that. Is that a true statement?
Through the chair, Commissioner Meyer, I would agree that there's plenty of work for us to do with the V1 version of a Wyoming stable token, the frontier stable token that we've issued. I will, however, note that we've certainly had some dialogue along the way about a yield-bearing stable token, what that might accomplish for us in terms of interest. And I will note, again, getting a little ahead of the agenda, but the yield-bearing stable token is one of the 2026 interim topics in front of the Select Committee on Blockchain. So I've testified about that previously when asked. Again, summarizing at a high level here, there's legal considerations, technical considerations, and financial considerations. Starting with the legal side of things, while exemptions may be available to states for the distribution of interest with things like muni bonds, the goal here is also figure out a model that would work within that state framework as well as the federal framework. So we were to structure it as debt. We have limitations in the state about how much debt the state could take on. So looking at those different types of mechanisms is something that we've already began a preliminary assessment with, both with the Attorney General's office and with our external legal support team at Paul Hastings. So we have weekly meetings with them to talk about not only some of the policy work that we're doing, but this is a persistent topic that lives on that agenda and we drive forward on a week-to-week basis.
Commissioner Revel.
Thank you, Mr. Chair. Mr. Director, could you speak to the current situation at the federal level as it relates to the market structure bill, the debate that's ongoing there about the ability to provide interest and how that might or might not affect what Wyoming's able to do?
Through the chair, Commissioner Revel, another excellent question, a little bit complex, but we will get into the weeds here. So starting with the Genius Act, there already is a prohibition on stablecoin issuers providing yield or interest to the holders of stable tokens. So Circle is already prohibited from providing yield to the holders of USDC. Now there's different flavors of USDC that live offshore. They offer yield. That's not different than what we've seen with other yield-bearing stablecoins that have gone to Bermuda or other areas in that realm. I'm hesitant to call it a workaround because these models existed before the Genius Act, but the relationship that Circle has with Coinbase as a centralized exchange, for example, while Circle can not provide interest to USDC holders, if you were to purchase USDC on Coinbase and stake it on the Coinbase platform, you could earn up to 5% APY, relative, just throwing a number out there as hypothetical, but you would be earning interest on that platform. And then they may have a mechanism behind the scenes at Coinbase where they lend that out to other programs, and that's how they make their funds and pass on some percentage of that to the customers and clients that are depositing that USDC on the centralized exchange. So while Genius handled the issuers, through the Clarity Act, there seems to be a desire to go back and revise perhaps some of that language or to limit the ability of those third-party resellers of stable tokens from doing that, prohibiting them from doing that. So that's where the impasse seems to be on this. There is concern, as we highlighted from the White House assessment and the pushback from the American Bankers Association. There's some concerns about deposit flight if you're offering some amount of interest through stable coin holdings. Dollars would leave banks where they're not earning as much interest, be swept into digital assets, and then they would earn a greater percentage of interest. We haven't really seen that yet. And again, I think the data from the White House would demonstrate that. But as this industry grows, it is a bit more of a TBD.
Follow on if I may. And does that instruct us in Wyoming in terms of how we might approach this topic?
Through the chair, Commissioner Revel, I would first just simply note that it is not the position of the commission, but if you were to read the text of the Genius Act regarding the permitted payment stablecoin issuers and how they're defined under persons. Persons are banks, individuals, fintechs, trusts, and other business entities. It does not have coverage there for sovereign states. So if those PPSIs are limited, I would argue that we are likely not limited. And if we were to unlock this feature, we would be unique in that capacity. That being said, again, it is not without significant legal research that we'd want to move forward with this. From the technology perspective, it's not actually that difficult, so I'll hand wave that for the time being. But I also would flag, as I referenced earlier, the financial considerations around a yield-bearing stable token. Definitionally, if we are offering yield to holders of a Wyoming stable token, those are dollars that are not coming back to the state. That being said, there will be, again, personal opinion, some equilibrium point where a yield-bearing product would be more interesting and have higher market cap, to a point where even if less net dollars per supply are coming back to the state, we may still supersede the amount of interest income at the net level with having that feature turned on. But there's still a lot of work for us to do on that. Again, we've already been triaging it through the weekly legal sessions. And again, we will have oversight from this commission, this body, as well as the select committee as we bring that forward.
Any follow-ups?
Follow on if that's
Yeah.
okay. Yeah. Thank you, Mr. Director. That's really helpful information. I'm curious. So the current Circle agreement with Coinbase, Circle is still keeping all interest earned on its reserves. The payment of yield, if you will, is happening in a separate agreement between Coinbase and its token, the token holders who are pledging their tokens to Coinbase. Is that correct?
Mr. Chairman, Commissioner Revel, that is my understanding, that there is a split between Circle and Coinbase, and then a subsequent split between Coinbase and the end user. That's that APY feature.
Mm-hmm.
I believe that feature is now gated behind a premium product. It may have been previously gated behind investor accreditation. I would need to dig into that. But that is my understanding of the structure at this time.
Thank you.
Commissioner Meyer.
Well, that was part of my question. You were thinking the same way, but that's great. But the thing that I would look at, because you have that to me, it would be a firewall to where if an offshore entity, a coin or whoever had Wyoming stable token and they were basically providing a yield bearing contract with the stable token holder, that would not be considered Wyoming debt because it was on the third party in a different jurisdiction, and we have no money that would be coming back to the state.
So through the chair, Commissioner Meyer, not entirely sure I understand the example. So if I misunderstood, I apologize. But if we're the issuer of the token, regardless of whether a third party is providing interest, if we don't have an agreement with that third party, we would be receiving the interest. Maybe we pass some amount on to the third party as a revenue share for licensed service providers. But
well, I think we're excuse me for interrupting, but so the third party that let's say Coin, we had a relationship with them and they were getting a revenue share as if they were I guess, one of our partners. And they issued that coin, on their behalf. I think that's a third question, or a second question, that whether or not they could offer a yield bearing thing with the coin as collateral. I'm thinking of Joe Blow buys a coin and he deposits it, or token, he deposits it with coin. And in that deposit, Joe Blow gets a yield from coin. So I think that's a different thing. What you're thinking of is contemplating that we actually have coin being a representative of the stable token on a revenue share contract. And then they offer that for a yield bearing thing. I think that would, I'm not sure whether that would constitute debt. I think the first analysis wouldn't constitute debt, but I think that's something that as we go through this process is to see what happens, in these foreign jurisdictions and what can happen with our coin and how it may or may not affect whether the state actually has a third party obligating the state of Wyoming. And my contention that it's not an obligation, but we need to make sure that that's particularly the case. And that would insulate our American banking system. That if that was the case, that somebody in an offshore situation could get yield bearing to their customers, with the representation of our coin, but we wouldn't be obligated for that. So that's kind of how I think would work, and that would protect the U.S. banking system from us directly competing with their yield-bearing instruments and their deposits so they can make loans.
So through the chair, Commissioner Meyer, a number of facets to that question, but I think in short, that is correct. That would not be creating, if we had some kind of agreement with a third party exchange, one of our licensed service providers, colloquially a reseller of the stable token. If we have a rev share agreement with them, similar to with the example with Circle and Coinbase I just gave, if Coinbase was to have a relationship with the end user, that would be their debt, their obligation. We would not have any part of that. But then again, we could further scrutinize this, but if some of this back and forth with the Genius Act reaches an impasse and says third parties can't provide interest, it might be a moot point anyway.
Director, I'm wondering about an issue that's been on my mind really since the inception of all of this, and that is the notion of making this a sort of an independent authority as opposed to a piece of the state. And I'm curious if you have any thoughts on that, or if that's something that this commission would like to have a little bit of definition on.
Sure. So, Mr. Chair, if I heard correctly, the question about converting this to an authority, from a commission to an authority, again, that is one of our interim topics where the Select Committee on Blockchain has put forth in priority number 1, and I'll just crib this for the time being. The Select Committee will evaluate legislation to restructure the Wyoming Stable Token Commission into a digital asset authority, broadening its role to serve as the centralized administrator for all Wyoming government-issued digital assets. So I think there's certainly a dialogue for us to have about what that would empower, what the structure would look like, where we can continue to rely on state infrastructure versus where perhaps we'd be wanting to build our own or have some kind of arm's length independence. I certainly think we had discussions around this as early as February or March of 2024. We were kicking this off and then realized very quickly with a small team and desiring the oversight that this commission brings with it, we stayed plugged into the state infrastructure, and that has served us well to date. But going back a few minutes to the question that Commissioner Pope asked about financial reporting, when we're pulling in data from all these different sources, it might behoove us to have our own bank account so we can rec to cash, to have the ability to have all these different feeds come into one unified system rather than try to pull different sources of information together manually. So and that's all the technical nits of it, rather than getting into what an expanded remit looks like for us. Just relaying what we've heard from the Select Committee interest in yield-bearing stable token is in there. Real world assets, so tokenized gold or other commodities, those are on the docket as well. And then what I think is quite critical is the ability to get other state agencies using the Frontier stable token. We've identified in the past, we've discussed in these forums that while we're looking to work with different agencies and we can create great efficiencies, there may be statutory limitations just in the language, right? If a agency can use monies, well, we're not a currency, right? We can't force use, so we don't really fit into that statute. So one of the other topics here is whether a Wyoming stable token or any virtual currency in the state could be considered a cash equivalent, for example, versus going agency by agency. There's pros and cons to both of those approaches, and we're beginning that dialogue with the co-chairs as we speak.
Thank you. And just for the record, I've been eager to start getting my statutory salary in Wyoming stable token, but that's the way off. I just thought I'd give the auditor a little heartburn.
Mr. Chairman, we have started those conversations as well. Statutory changes are not surprising to us, but that will be part of the upcoming effort.
Right. Further questions? Please proceed.
Thank you, Mr. Chairman. We'll keep the rest of this update quick. From an international perspective, Hong Kong has granted its first stablecoin licenses to HSBC and a firm called Anchor Point, which is a joint venture between Standard Chartered, Hong Kong Telecoms, and a Web3 gaming platform called Animoca. So that's the first set of stablecoins issued under their new regime, which came into effect in August of last year. There are several Swiss banks also testing a Swiss franc stablecoin. UBS, Postfinance, Signum, Raiffeisen, ZKB, and BCV are part of that initiative. And this is the first franc-pegged stablecoin that I think I'm aware of. And this is in a sandbox. And then we heard from the Bank of England's Governor Andrew Bailey said that progress on internal stablecoin standards has slowed, which I bring up because in prior meetings when we've done these updates, the international side of things has not really received an update in a few months. So I thought that was an interesting reflection of what we're saying here being seen abroad as well. In terms of the incumbents, Tether has now launched a crypto wallet called Tether.wallet, and PayPal has expanded its PYUSD dollar-denominated stablecoin into 70 different international markets. And that is the news update for the month. Happy to stand for any other questions.
Just real quick, when gold really hit the skids, I know Tether had a lot of their I guess reserves in gold. I wonder whether or not they broke the buck or whether there was any information on that.
Through the chair, Commissioner Meyer, that is not something I'm not going to personally opine on that. But Tether has put out a few clean audit reports of late, and they've just recently engaged 2 of the big 4 audit firms for a more substantive audit of their holdings. So I would say just wait a little bit on that one. We'll have that information probably in the next few months.
Very good.
Okay. So, Mr. Chairman, I'll continue on to front issuance. We are still holding steady at 1.5 million front in circulation since launch. But now with the session wrapped and behind us, our team is rapidly shifting to a more business development focus mode. So clearing calendars to focus on that. Similar to our conversation a minute ago about the attestation report, we are now dividing and conquering on our LSP onboarding. So the licensed service providers, again, the resellers of the stable token, we've asked them for a lot of information. We want to make sure we're doing the appropriate amount of diligence on them, but that has all coalesced with one resource. So we've now kind of quantized that process. The entire team will be looking to get more of these resellers online. So those will be different cryptocurrency exchanges, potentially community banks and credit unions, payment platforms, and more. And then we also, as of earlier this month, engaged Ernst & Young as the final piece of our procurement efforts to help us with internal controls, but also to help build out the risk assessment framework and help hopefully automate some of that so that we can actually assign scores to these organizations before we bring them on as licensed service providers. That way, if we ever get questioned on why'd you bring in partner X, we have a objective and mathematical answer to stand on. We also had a question last week during the public comment section around not the value of tokens and circulations, but the number of holders of how many wallets are holding these tokens. There are, across all these different chains, there's 58 active digital wallets, but there's a big asterisk on that, which is one of those active wallets is the Kraken hot wallet, i.e. the Kraken exchange. So we dug into that, and while the number of individual users may be hard to determine, we saw that there was 84,697 transactions through the Kraken platform. And that's about $500,000 of value going back and forth over the last 30 days on the buy side and sell side. Taking a step back and looking at all the different digital wallets, we've seen 169,152 total transfers, amounted to $763,000 of total transaction volume. So we are seeing some movement. It's somewhat from a visibility perspective, you're not seeing all of this on chain, but again, we dug into some of the information there to find these transactions, and there you have it. And I'll make one other asterisk, one other note, since we're talking about adoption and scaling. A lot of this activity is happening on Solana because Solana is the blockchain that the Frontier stable token is available on through the Kraken exchange. So we're working with them and other platforms to expand across the other networks that we can deploy to natively. Because if the tokens are, this information tells me, if the tokens are available there, people will purchase and exchange them. So we'll make sure that's part of our push. It has been and will continue to be. But happy to answer any questions on that. Commissioner Navas has a hand up.
Thank you, Anthony.
Commissioner Navas, good to see you.
Thank you, Governor. So, Anthony, for purposes of business development, is the team properly staffed? Do you have enough resources to be able to go into biz dev activity right now?
Thank you. Through the chair, Commissioner Navas, thank you for the question. So again, front running a few agenda items here. We will be talking about AWEC resourcing imminently. One of the things we're looking to do is to bring on a sixth resource, having that person help with some of the day-to-day tasks and reporting requirements of the agency would help free up our current senior business program management analyst to help with more of the biz dev. She's already been helping with a lot of the tracking and tracing on our project management software suite, which we use Notion for. We're tracking several dozen of these licensed service providers. We're tracking states that are interested, international jurisdictions that are interested. It's a matter of just having the time to free up a pair of hands to make sure we're staying on top of all of this. So bringing on a sixth resource would help facilitate that. We certainly have the budget to get that done in the next few months here in this biennium. But I will note that for BFY 27, we have an explicit AWEC allocation of 6 resources. So the goal is to bring on a resource imminently to help with this scalability.
Thank you, Anthony. So as a follow-up question, do you need anything from the commission to be able to enable you to do that? I know as you're speaking with other licensed service providers, do you need approval for additional RFQs or RFPs or anything else?
Through the chair, Commissioner Navas, at this time, I don't believe that we need hands-on assistance to help with the outreach to LSPs. We already have a lot of interest there. I think what could be helpful is the actual work within the state as we go agency by agency to figure out who has really an ability for us to work with that agency to identify a use case and structure it and deploy it. So, for example, we've been talking about, and we've discussed in these public meetings before, working with the Treasurer's Office and the Unclaimed Property Division to perform the return of claimant funds using the Frontier stable token and doing that for fractions of a cent rather than going through a process that is somewhat costly for people who have small claims amounts. Of course, we have to go through making sure they're valid claimants, and we work with the Treasurer's Office to do that. But in terms of the financial rails, we can provide that. So there's already a statutory review ongoing, and I do believe that one of the standing committees has broader changes to the unclaimed property statute on their docket for this interim session as well, as an example.
And for engagement with potential participants that are outside of our government system and that potentially we need to apply for, go through an RFP or an RFQ process. Is there anything that you need assistance from the commission in doing so?
Through the chair, Commissioner Naves, probably not within the next 30 to 45 days. However, I will remind this commission that there is a standing mandate for us to create some redundancies with our vendors. For example, on-chain analytics firms, they all use different algorithms to detect illicit or malicious activity on chain. That would be an option. Having backup and redundant custodial relationships. So we've talked through that, being that we've just finished the procurement from the last go around with Ernst & Young coming on board. I think we now are ready to get back into that. And that could be something where the commission would be helpful in that, in creating those RFQs, RFPs. I would assume it'd be much easier than doing 7 concurrently like we did last time. But having some hands-on with those and helping with the interview process would be beneficial in the coming months.
Thank you, Anthony. So for my fellow commissioners and governor, we may consider if we need as a commission to have a subgroup or anyone that is going to be working with Anthony more closely and the executive team on the production of these RFPs and through the screening process. Obviously, we do have currently certain subcommittees that are active, finance, legal, and the like. I just want to make sure that we as a commission are able to enable Anthony and the executive team to continue moving along. They are getting now, sometimes you say it is harder to actually get traction on something than to build it. So we've done the work of building the token and it's out there and it's live and it's working. We now need to make sure that it's actually getting traction and reaching the hands of everyone that has an interest to do so and the ability to do so. So business development, it becomes critical part of this process. I'm glad to see, Anthony, that we are going to be allocating a resource to do that and that the team feels staffed and has the appropriate resources to do so with the 6th person coming in. But I believe that the commission should also be considering what it is that we need to do as a commission to support the executive team to accomplish that.
Director, I'm going to have to leave, so let me turn this over to the auditor. Thank you.
Thank you, Mr. Chairman. Madam Chairman.
Go ahead.
Thank you. I will go ahead and keep moving us forward here. I'm just keeping an eye on the clock. So unless there's any comments about the front issuance, I'll move on to the interim topics, which we will also keep quite breezy. Commissioner Revel has a hand up.
Go ahead, Commissioner
Yeah,
Revel.
sorry, thank you, Madam Chair. Just before we move off that last topic and building on Commissioner Navez's comments, have you contemplated, Mr. Director, a business development role as part of your staff as a potential hire and just bringing in someone with that skill set?
So through the chair, Commissioner Revel, when we get to the resourcing, you'll see that we've changed the role of the senior business project management analyst to a enterprise project management analyst, and a large swath of their respective responsibilities will be focused on that. They certainly have the talent, and that should be the role. But because we're a small team that is on a day-to-day basis triaging a lot of just in-state tasks and managing the oversight, we just need more hands. So having someone who's junior on to help with the redundant tasks would allow that enterprise business program manager to spend, a quarter to 30% of their time on biz dev straight up.
Thank you.
If there are no other questions, Madam Chairman, I will continue with the 2026 interim topics, which I will keep quick because we have already talked about these a bit. So what I've shared is the letter from the Select Committee on Blockchain, Financial Technology, and Digital Innovation Technology, specifically the co-chairs, to Management Council defining the priorities that they have for the 2026 interim. Priority 1 is state engagement with technology. Again, looking to better serve Wyoming state agencies with digital assets. And then we also talked about the conversion of the Stable Token Commission into the Digital Asset Authority and broadening its role. Priority number 2 is the Wyoming Stable Token and digital asset development. So again, increase adoption through integration with government processes. Consider clarifying fund's status as a cash equivalent. Although we talked about that before, that might bear some fruit. It may also cause some limitations for us on the yield-bearing discussion. And then also support the tokenization of real-world assets. Beyond that, there's coverage of the special purpose depository institutions in light of the Genius Act passing. There's conversations around artificial intelligence governance. I would note the one topic and only topic to my knowledge that was denied by Management Council of the Select Committee was oversight about water and electricity usage by AI and by AI centers and other data centers, because that is falling to the Minerals Committee. They're also going to keep working on data privacy and ownership. The data privacy bill did pass in this session. However, it might need some customization on agency by agency basis. I'd also note that Utah has now created what they refer to as the state endorsed digital identity statute, the first of its kind. I'll be speaking with some of the representatives there on Monday and Tuesday of next week to learn more about that, imagining that might fall under our remit too, but good to see that that is here as well. And then finally, there's coverage of prior legislation where you talked about the SPDIs, but anything covering the virtual currency kiosk bill that was passed this year, DAOs, which are decentralized automated organizations, and the DUNAs, the decentralized unincorporated nonprofit associations, reviewing the entity wrappers for those and seeing if they need any further adjustments. Any questions on the 2026 interim topics?
Any questions? Anthony, do you know how many meeting days that is?
Thank you, Madam Chairman. I didn't mean to mention that. Just I have so many notes in front of me. I forget which set of notes is the notes. We are back to 6 meetings this year.
Okay.
So last year was dropped down to 4,
Okay.
and then they tried to add a 5th back, and the 5th got canceled, and that created a bit of headache because there was active legislation, and it ended up getting individually sponsored over time. But that the goal was to have more sessions than less. So I was happy to see that there'd be 6 sessions because that is a lot of material to cover.
That's what I was going to say. Thank you. Okay.
Any other questions? Okay.
Go ahead.
Moving on to our next topic, which is rulemaking updates. So again, with statute change, specifically our ability to take in donations, and with the change to the reserves structure, we've made some changes to our rules. So in front of you, you should have 3 docs for this. One is the Wyoming Stable Token amendments, so you can refer to those if you need them. You also have on top is the reserves rules, and then we also behind that have the token management rules. You have the full rule set, although not every chapter has an update. Mr. Chairman.
I am sorry, Director, we got a bit of information. So if this is a topic that needs to be finished and can be finished quickly, that would be great to go ahead and do it. But otherwise, I'd like to let Craig tell us what's up.
Yes, sorry to interrupt everybody. We've got a suspicious package at F.E. Warren Air Force Base. F.E. Warren has put a 1-mile barrier out of evacuations. The Capitol is just within inside that 1-mile area, so we're going to evacuate the Capitol.
Mr.
We
Chairman.
do this on a regular basis with this commission.
One more time, we got to have a hat trick. Mr. Chairman, I would because this is rulemaking and jobs, blockchain selection, perhaps an executive session, perhaps having a special meeting at a later time is appropriate.
I think that's fine. We'll do our best. This may be over relatively soon.
Okay.
And, we'll see what we can do if that is up to the, what? Oh, agents, there will be a email going out to all agency personnel on this issue. My apologies. I guess with that, I will say that we are, would I say suspended?
Move to suspend.
Yeah, it's been moved and seconded. We'll suspend the meeting until further notice.
Don't know that we.
Thank you.
Thank you all.